you've got a little bit of extra cash sitting around, what's the first thing it's going on?
Oh, I think I would need to buy table tennis tables in all of our Barclays Eagle Labs, enhance that communal mindset and also a good little bit of networking.
It's very generous. I'm thinking maybe slightly more selfishly, I think the office needs kitted out. Racing simulator. Don't know why I need to act that out. Anyway, hello, my friends, and welcome back to Working Lunch. This is the show perfect for hungry entrepreneurs looking to learn more about scaling. Today, we're discussing the world of funding and borrowing in business. To help us today is our guest, Luis Santos. Now, Luis has spent 15 years transforming everything from lending to payments, blending digital innovation with strategy tailored for real-world business challenges. We're in good hands. Welcome, Luis. Thank you so much for joining us.
Thank you. Glad to be here.
So, Will, we love a good challenge. And today, we're talking about the different ways that you can boost business fortunes.
I see what you've done. The wordplay is good this series.
As you can see, the fortune cookies right in front of you. You pick one, open one up, and we'll discuss what's inside.
Stunning. I can pick whichever one I want.
You can do, but just before we do, we'll bring in Luis, who can tell us a little bit around where do businesses start with funding?
So there is not one size fits all. It all depends on what you're trying to achieve, where you are in the stage of growth of your company, what are you trying to acquire or borrow for. And based on that, you can assess the different options. In Barclays, obviously we fund from startup to IPO, so you can get all range of options for all the stages of growth.
How does a bank assess your suitability and your needs?
So there's many things go into it, but typically I would say 3-4 things to look at. One, we care about you as a business owner. So what how you run your business and your commitment behind it. You tend to look at the business itself. How is it performing? Obviously, we want to make sure that it's affordable and you can afford it as well. So we have that responsibility and we work with the client to understand, what is the business trying to achieve and if the business plan is sound. And finally, we tend to look as well is if things change. Your environment changes, interest rates change, economy change, your business and yourself, you might change as well. And what happens in those circumstances? So you tend to look at these things and then you come to a conclusion, what is the best product and how much you can support as well.
Amazing. Well, I think that's a good starting point. So, Will, please choose your fortune.
Okay.
What's your destiny?
We're going to go furthest away first and we crack them with the hands, yeah? Okay.
Yeah.
Stunning. Okay, mine here says asset finance.
Oh, okay, interesting. Luis, can you tell us a little bit around asset finance? What is it? When would it be useful? What does the repayments look like?
Yeah, so asset finance is when you're trying to purchase a piece of equipment, could be a van, could be a piece of machinery. So what it means is your provider will give you what you need to do your business. And instead of you acquiring the van, you actually using it for the purpose you use, and you make monthly payments. So it's quite flexible. You are pretty much not spending too much money to acquire the whole equipment. You actually pay monthly fees, so it's much more affordable for you. And depending what type of asset or equipment you're buying, at the end of it, you might just keep updating it. So obviously, you return the old van, you get the new van. If you're buying something else, you can have as well possibility of renewing your equipment and keeping always up to date.
I think we use a lot of that for in my business, just for camera equipment or whatever. It's just the easiest way just to get a new thing in, make sure it's good for you before fully committing. Do you want to take the second one or is this all me?
I'll go for it. Why not? Right, so the second fortune cookie is business loans. Please, could you tell us a little bit more around those?
Yes. So business loans is a broad category. There's a lot of different things to look at, but I'll just give a few nuances of how it works. But essentially, you tend to borrow, amount of money that you want to repay over a period of time. And the business loans then vary in multiple ways. One is secured and unsecured. So unsecured, you don't pledge a security. If you're a secured loan, you have to put a security. It could be property, it could be an asset, could be even a personal guarantee as well. Also, the term can vary, can go from 6 months or shorter to 5, 10, 15, 20 years. The the way you repay a loan can also vary. So you can do interest only, which means you just pay your interest, your capital remains flat, and then you pay it at the end. Or it can be amortizing as well. So it means every time you make a monthly payment, you get, you amortize your capital as well as you pay your interest. Now, the key thing about how to choose and navigate through these is it all depends on what are you trying to do? Are you trying to invest for a long period of time or not? What typical lender tends to do is to try to match the profile of the loan to what are you trying to do to your asset and how we're going to use it. Can I give you an example on that?
Of course, yeah.
Yeah, all right. So for example, if you are a developer and you want to develop a new property, you probably go for a long planning phase. Then you need to build the houses, and then you might sell it or rent it. So during this period, you spend a lot of time investing, but you're actually not getting revenue. So what you might want to think about is you agree to get the funding, but you don't pay interest, or you just pay the interest, you don't amortize the capital until you actually start to sell the properties. Right. You try to match the profile of the loan to what you're trying to achieve.
A little bit of less pressure at the start and more when the revenue's coming.
Yeah.
Makes sense.
Hopefully you're learning that you have options when it comes to funding. From secured and unsecured business loans to business mortgages and asset finance that can help you invest in equipment or unlock working capital, or even overdrafts to help manage short-term cash flow or seasonal shifts. The point is, there isn't one route to growth, and we'll help you find the right one. Search Barclays Business Borrowing. Now, let's get back to the conversation.
All right, so welcome to Bittersweet. So in here they both look quite nice. So in a second, I'm going to ask you to choose one of these, okay? One of them's bitter, one of them's sweet. Depending on which one you get, we'll ask you to share an anecdote with us about funding. All yours.
So I choose.
You can choose either one. Building the tension, man.
Right. Eat it together. Go. Oh, that was bold. Oh, sweet. It's giving bitter.
Oh.
What is it?
What is that? It's like fishy.
No. Please, could you share an anecdote of a sweet story of a business receiving financing?
Yeah, so that's my favorite part of the business, and my job, obviously, is hear what businesses do with the funding we provide. I'll probably choose one that was quite recent, a farm in the Midlands, and is a family business. So the father, mother, the older generation lives in the farm. The son has his wife now and kids as well, and they all live in the same property. And they wanted to do multiple things. They wanted to swap a piece of land that was a bit further away with one of the neighbors, get close and make the property bigger. They wanted to refurbish one of the cottages so the son could move out with the family and live there still in the property, move business ownership as well to the son, and buy some harvest machinery and all that. And what I like about it is that you can have all the products, everyone can provide the products, but actually the relationship manager we have went there, understood the business, understood what we're trying to achieve, and work in all these things that you wanted to do only in one place. And at the end of it, you get a lovely letter from the customer saying, I didn't even know we could do all of it in one go. You kind of really set us up for the next generation. So that was great. That was great when you get that. So that's amazing.
Makes a real difference. Well, lovely. Let's just move on swiftly from that. That is awful.
So on to the next fortune.
Business mortgages. Could you possibly tell us a little bit more about them, how the repayments look like, and when they're useful?
Yeah, so the mortgage is quite similar to the business loans, but the key thing here is that what you tend to use the funding for is to buy the premises where you operate.
Yeah.
That's the main difference. So what you do is then the loan is secured by the property you're buying. So that's the main difference versus a loan, which is much more general purpose.
I'm seeing one last one, and I do think it is your turn.
Oh, thank you kindly. So, on to the last fortune. No peeking. The final one is business overdrafts. Could you tell us a little bit more around those and when they might be useful?
Very good. So overdrafts, the most important thing is that they're flexible. And they tend to be used to manage cash flow. And as your cash flow goes up and down, obviously you want to have flexibility in terms of borrowing or paying back to your overdraft. They can be as small as £500, they can go up to hundreds of thousands of pounds. And obviously, the smaller overdrafts probably will be unsecured. The larger ones, you might pledge security as well. So you might put, security behind it. And the key thing, as I said, is flexibility. You pay a fee to agree a certain amount, say £5,000, and then you go into your overdraft as you need, and you pay interest on the amount you're borrowing. Okay, I'll give you a couple of examples. So if you are a seasonal business and you need to stock up, you might want to have that flexibility, which is agreeing an overdraft so you can get your stocks in. And then as you go through that season, you sell your stock, you can do your business and you pay it back. Or, for example, agricultural businesses, they are quite popular because obviously, you have a harvest cycle. You prepare the land, you sow it, you then get the harvest, you sell it, and then you pay it back. So it's quite flexible for you to do that. Yeah. So that's where you tend to use them.
Please, could you give us some insight into how founders or small business owners can access all of these borrowing options?
The key thing is typically smaller loans, simpler loans, you can access digitally and online. You can actually do the application and get your money online. As you get larger amounts or more complexity, you typically will want to talk to someone. Not just because you want to do that as a business owner, but also from a bank perspective, you want to make sure that you understand what you're trying to achieve and try to match, as I said, the previous products to matching your needs. And that can be, depending on your complexity, can be something that you probably do by reaching out to a bank or a lending institution. So once you've, got the cash, you probably as a business owner, you want to focus on running your business, make most out of it. So that's primary objective. But you should always continue to engage with your financer because you want to keep building that relationship. You want to continue to think about what is coming next. And particularly if things change, you want to reach out early. You want to say, things have changed. How can we adjust things? It could be taking capital repayment holidays. Could actually be more financing because you want to invest in the next thing. So I would always say, make sure you keep that relationship open and keep engaging with us.
Well, brilliant. Thank you so much for your time. Now, at the end of every working lunch, we ask our guests to kindly leave us a tip. So could you possibly give us, say, your best piece of advice for anybody looking to scale their business through financing?
I think my advice would be reach out to us early. So you might not still know what you want to do. You still an idea forming in your head. You still don't know what options you have, but we have a wealth of knowledge of small businesses across the country. So reach out to us early, tell us what you're thinking about, and we can help you through that journey.
Thank you so much. Well, that is it, my friends. That is all from us. If you would like to find out more about the topics we discussed, make sure you head to the Barclays website or hit subscribe right here so you can stay in the loop as we bring you more working lunches with more wonderful guests. We'll see you soon.